Hey guys, Kevin Bupp here, and I want to welcome you to another episode of the Real Estate Investing for Cash Flow podcast, where our mission is to help you build and maintain massive amounts of cash flow through income producing real estate investments. Now, our guests for this week's show are land investment experts Mike and Ligia Deaton. Now, Mike and Ligia are a husband and wife team who transitioned from their corporate rat race to full time land investors and educators. Now, after being laid off basically on the same day. We're going to talk about that here today. We'll get the backstory here, but basically being laid off from the corporate gigs the same day, they turned to what could have been a major setback into an entrepreneurial springboard, and that's when they launched Flipping Dirt, which is a company that focuses on buying and selling raw vacant land for profit. So they've got a mission now to help others achieve time and financial freedom by building a simple, scalable land flipping business. And so excited to have Mike and Ligia here on the show today. Guys, how you doing?
Great, Kevin. Thanks so much for having us on the show.
Yeah,
Looking forward
excited.
to a fun conversation.
Yeah, excited to have you here. And again, I was on your show a couple months back, and
Mhm.
so now we're turning the tables, and we're going to talk about your business. We talked about all about me, which gets boring, and so but now we're going to have fun and talk about land business, and you guys are doing that as a team, and so super excited to learn more about that. But why don't we let's back up the truck a little bit for folks that are tuning in that aren't familiar with your story. Maybe let's back it up to the corporate days, and let's talk about what that looked like, and ultimately how you found your way into the world of land investments.
Yeah, love that. Love the story. Well, for me personally, I grew up here in the U.S. What I considered in a middle-ish class family. My dad was actually an entrepreneur. He was in real estate in the latter part of his entrepreneurial days. He did. We were kind of the OG home flippers. When I was 10, we were buying homes, living in them, fixing them up, flipping them. I mean, we moved so many times. All of our stuff was forever in boxes, and it never really took with me. Like as I went through school, I had this W-2 mentality.
Hmm.
I was on a pre-med track. I loved science and math and thought I'm going to be a doctor. I'm going to make a bunch of money and just kind of go that route. I went to college in my hometown, Fort Worth, went to TCU. Shout out to the Horned Frogs. And I got a couple years into pre-med and for a few different reasons decided that maybe wasn't going to be what I wanted to do. It was just a long educational slog, debt. I faint at the sight of blood, which I don't know if that is a deal breaker or not, but wasn't looking good for me in the medical world. And so I just got out into corporate America. I graduated, biology degree. What the hell are you going to do with a biology degree? But I got into manufacturing and I worked for like some big tech companies. Motorola was my first employer out of school. Motorola was huge at the time. Pagers were kind of big, but it was really transitioning into, text paging was the big thing. And then I transitioned from Motorola into Nokia mobile phones when mobile phones and Nokia was just king of the mobile phone world. And then Microsoft bought the handset division of Nokia. And so I became a Microsoft employee and I worked with Microsoft. And I was in operations and supply chain for decades doing all of that. And Ligia and I met. She was also working for Nokia in a different software development division, but we started building a factory. Ligia's from Romania, and we built a factory in Romania, and I got assigned to be leading the startup of that factory. And Ligia came over into my the same department that I was in, and we kind of met there. And that's when our journey started together. And a few years later, we got married. But when we came back to the US in 2010, that was in 2006 to 2010, when we came back to the US, we were still corporate employees. And yeah, as you alluded to, in the summer of 2016, we both got let go. And
Hmm.
we didn't have ancillary or side incomes. Like we were workers. We had W-2 income. We saved in our 401k accounts. And when we both got let go, that was our sole source of income. And so, fortunately for us, we had some money in the bank. I got a nice severance from Microsoft, which bridged my Nokia day, and so I had like a really long seniority that I got a decent severance on. So, but regardless, when that moment comes, it's like a punch in the gut. It's like, holy cow, we're out of work, and the knee-jerk reaction is to go back and to get a job. I mean, that's what I'd done for 20 plus years. That's what I needed to do. And so I had interviews with Amazon, Tesla, Apple, and these were all West Coast. We were living in Dallas Fort Worth at the time.
Hmm.
These were all West Coast companies, and I just started thinking, what kind of company culture am I going to step into? Am I going to be starting virtually at the bottom again and having to prove myself out and work my way up? And would we have to relocate? How much I was traveling 50% of the time with Microsoft, like I
Wow.
had an international role, and was I going to be traveling again? So fortunately, I have a super supportive partner in Ligia, and we took a moment to just slow down and say, hey, let's take a minute to think here. What do we want out of the next chapter of our lives? And it really wasn't the things that we were doing. It was time together. It was time enjoying nature. We love to travel, all these things we wanted to do. And so we just kind of took that moment and thought, what can we do to pivot and do something different? And, we can get into that part of the story here as well. But Rich Dad Poor Dad was a springboard into thinking about cash flow, thinking about real estate. I listened to a lot of podcasts back at that time. I heard a couple people doing land flipping, and it just sparked enough of an interest and enough of a kind of a thought pattern that like maybe this can work. And so we just decided to start pulling on that thread. And yeah, we dove in, and we can get to the rest of that story here in a little bit. But I don't know if you have anything to add there. I kind of spoke for
No,
both of us for a bit.
that's great. No, what I wanted to say to add a little bit is like obviously we had a certain amount of dissatisfaction in our lives, and
Hmm.
many times change happens from that place where
Hmm.
you just want to change most of what you're doing to do something different. It comes from that dissatisfaction, and it was very good for us to embrace it and realize we don't want to do the same things over and over. We want to pivot and change and see what that change takes us.
Hmm.
Yeah, no, I love that, and yeah, obviously there's many different vehicles out there. Yeah, I mean, you chose real estate, but within the subset of real estate, there's I always joke and say there's a million and one different ways to make money. Investing in real estate, you guys ultimately landed on raw land, and so help me understand that. I guess what really intrigued you about the land business, and what did the first foray, what did that look like for you?
Yeah, like I mentioned, I had heard two different people on different podcasts in a short amount of time that were both doing land flipping. And to hear them describe it, it was not too much of an investment to buy a piece of land. They were buying for 10,000 or less, these parcels of land, and flipping them for triple digit ROI, right? So they were doubling, tripling, 4x their investment in many cases on these deals. And so that was intriguing relative to a different business altogether where you have maybe a brick and mortar. This was 2016. And so, you know, the digital world wasn't what it is today. It
Hmm.
was definitely opening up, but it wasn't like the gig economy today where you can, start a marketing company or all these different kinds of businesses. And so, the thought of doing something, and this could have been a little bit of a closed mindset as well, but it was restrictive to us. And relative to, short-term rentals or home flipping just seemed like something that had a lot of moving parts, required decent amount of upfront investment, took time to accumulate. And so the land story was one such that, for what really seemed like an asymmetrical risk, a really low risk on the front end for outsized returns on the back end was intriguing enough. And I bought a toolkit, and back then it was a like binder of paper, and it came with DVDs that you put into a computer that actually had a DVD player on it. And this was not too long ago. It was 2016, 2017, but it was enough of an interest to us. We went to a boot camp. We networked with other people that were doing this and heard success stories. And so that was enough of a spark that we said, look, we have some capital. Let's allocate some seed money into a business. And we said, let's give ourselves 12 months of focused, really full-time effort to get this going. And, sure enough, I would say 6 or 7 months, we had gone end to end on a few deals and saw that this was going to work. And so we just went ahead and went all in. And it was, yeah, I would say it was fortunate for us because, a lot of those other business models are complex. There's a lot of wholesalers out there. There's a lot of flippers out there. I mean, we were in the Dallas-Fort Worth market, which is a really healthy market for
Yeah.
housing in all forms. But yeah, land, it just scaled really quickly. A lot of what we do, and we can get into the business model, but a lot of what we do is we'll owner finance what we sell. And so we have a monthly income from dozens of clients that are paying us to, like a bank, they're paying off
Hmm.
their note. And so we get even more of a premium on top of that. But for me, I'm a safety-minded person when it comes to finances. I like a certain amount of money in the bank. I like to know that I have some guaranteed income coming for years down the road. And that's just super comforting for
Yeah.
me. And it allows me to take bigger risks because I know, okay, we've got some runway going on there. And
Hmm.
yeah, it was really just things like this, right? It's a podcast. It's people going on telling their success stories. It gave us enough of a spark to go down the path. Like I said, Ligia is super supportive and our biggest cheerleader in that we can make this work. We can do it. I'm a little bit different. I'm a risk averse typically, but I think that this is where our partnership really nurtures each other because we bring different skill sets and different mindsets, and we have a good way of working together. But yeah, it just, we when we took the plunge, we decided to get a coach. We decided to join a group. We decided to surround ourselves with people that were being successful just to go faster. We said, if we're going to do this full time, let's invest in it.
Yeah.
And it was not a small investment for us at the time. I mean, we put a big chunk of money into getting started, and but it paid off
Yeah.
in really big ways.
No, that's great. I appreciate the background there. So maybe let's switch gears to the business itself. What's it look like today? Maybe give us a better understanding of your buy box, right? Like what exactly, what type of deals you're looking for? We're talking about land, but there's many different, there's many different profiles of land, size wise, location wise. So, where do you guys, what type of tracts of land are we talking about? Average size, price point. We'd love to have better understanding, like who the end buyers are, right? Who are these folks?
Yeah,
What are they buying the land for? Is it to put a homestead on it, or is it just recreational land? Anyway, just help us better understand the business model, if you
sure.
would.
Yeah, the 100,000 foot view is we're buying vacant land and reselling it. There's no value add. There's no, entitling it. There's no zoning. There's no subdividing. At its simplest model, it's buying and selling. And so, in order to make that business model work, you have to buy below market value in order to sell at market value because you're not going to really successfully be able to sell too much above market value. It can happen, but it's really all about the buy. And so there are definitely different markets and different types, as you mentioned, of properties, right? There's commercial real estate. There's commercial. If you look at a county, for instance, look at Dallas Fort Worth, just since I brought it up. Like you have a very diverse range of land across that market. You probably have some commercially zoned properties, right? You can build a multifamily unit. You can build an office center, and there's certain properties that are zoned commercial. There's others that are zoned residential, and then there's a lot of different classifications around that. There's ag land, agriculture, rural residential in some areas where you can have large acreages in a house. There's infill lots, like you mentioned, where you think about a typical subdivision with just quarter acre lot after lot. So there's all these different types, and it's really up to the individual. But I would say, in terms of a buy box, like, as you go up in value on a piece of property, like as you approach maybe $75,000 or $100,000 in valuation, it's much harder to get that at a big discount relative to the market value because the owners are typically a little more sophisticated, or they recognize that their property is worth more. They're going to engage in a realtor. They're going to look at different methods. A lot of what we do in buying under market value is we reach out directly to property owners. And so, if we pick a county, like we do a lot of land here in Colorado just because we love it and it's here, but we also work in Arizona, New Mexico, Texas. A lot of the Southwest is where we gravitate. but you can do this anywhere. But for instance, we'll get a list of who the owners are of vacant land. And there's a lot of different ways to do that. The county is the ultimate owner of all that information because they're sending tax bills every
Hmm.
quarter to people. And so whether you get it from the county directly or there are list service providers, you can get lists of who the owners are of the land in an area. And what we'll do out is we'll just go canvas the properties that we like, and we typically will kind of sit in a maybe $5,000 or $7,000 um, purchase price, and so that's going to be discounted to the market value. So the market value for us, it may be maybe we're looking at ten to $100,000 in assessed market value. And there's different
Okay.
ways to look at that as well. Counties assess it. You can do your own comp analysis and things like that. But we'll go out and kind of select a range of property owners. We'll reach out to them directly. When we started, it was all direct mail. It was basically just sending letters or postcards to people. You can make a direct offer. We like to do that. You can not make an offer. You can just say, hey, Kevin, I see you've got some acreage here. Would you be interested in selling it? Um, some people like just to spark a conversation. We like to find motivated sellers. And so we'll usually give them an idea of what we're willing to buy properties for. Um, and that's in a certain range. We like more residential rural type properties. We do some infill lots. Commercial is a little trickier, just it's a different asset class. And so it
Hmm.
comes with different, different rules in terms of how you do due diligence and things like that. We just kind of stay personally in a certain lane and keep it easy. And then once we transact a deal, we can get into due diligence on the side a little bit, but you mentioned our end user or client. We're mostly selling just to people like that are listening to this podcast, or that just there's a lot of people with the dream of owning land. They want to build a cabin, they want to park their RV, they want to go hunt or shoot, or there's different buying demographics.
Hmm.
But it's usually just an end user. It's not really an LLC or a company or a corporation. There are those types of lands, like, if you get into commercial real estate, you certainly attract a different type of buyer. But um, that's at kind of a high level, and then maybe the mid level in terms of the business model end to end, how it works. And then I think I mentioned, we like to owner finance a lot of what we sell, but we do a lot of cash deals as well, which are really nice. I mean, you
Hmm.
you get an infusion of money at a big chunk. There's ways to manipulate buying behavior. Obviously, you can make one more attractive than the other.
Sure.
And do that. But that's nutshell, the maybe bigger than a nutshell, but that's a little bit the business model.
You had referenced that you like to actually send out offers in a lot of your direct to owner communication.
Mhm.
What is there a general formula that you run with? I mean, obviously it's based on I think most of the time you're probably just for the purpose of like doing large scale, lists. You're probably just basing off the assessed value and running a formula, and that's the range that you're providing them as to where you might have an interest at buying.
Yeah, many times. So these days we have a handful of markets that we're really deep in. Like we've been there for a while. We know the submarkets and a lot of the per acreage cost, and so we can then dial in an offer a little more precisely. Early when we're in a market, yeah, a lot of times we'll use the assessed value or some fraction of it. Usually we'll do a rough assessment because each county assessor has different formulas on how they check the valuation, and some of them are
Hmm.
really off, some of them are different. And so I like to do the work up front a little bit just to get a rough feel. But at the same time, it's a conversation starter. And so you reach out to people. Um, if they're interested, they're interested. They're going to get back in many cases, even if it's with a nasty response or something. But more and more these days, there are different methods coming about where AI and the digital landscape, there are a lot of people that use texting, and so um, you can grab owner information. Like the counties usually only publish your physical address
Sure.
or whatever you have on file because they're mailing you a tax bill. But there's other ways to go about getting data for people now, and so there are people that there are services out there that will cold call, landowners and
Hmm.
start a conversation. They will text people. You can email people. There's a lot of different services popping up. We've tried several of them in the last, I don't know, 6 to 12 months, and dollar for dollar, the mailing is still a
Okay.
bit more advantageous in terms of a lead generator, but it's rapidly changing. There's we have some colleagues that are almost end to end running their business with text communication and AI
Hmm.
agents. And they're able to program in their buy box essentially and take something from a cold lead to the title company
Hmm.
and get things done. And so it's rapidly changing. It's not quite there yet, but I would imagine in the next 12 months we'll have a different conversation.
Have you actually seen that the response rate of the direct mail has been going down, or is it still pretty consistent?
It's definitely gone down. Let me just speak very broadly. From when we started to now, I would say things have gone down. It's still very market to market and sub-market dependent,
Hmm.
really. It just depends. Um, there are states and county. Florida is a tough market. It seems like there's a lot of competition there. I don't know if people are just desensitized, but we work with a lot of clients, teaching them how to do land flipping. And the ones that are in Florida or that at least target some counties in Florida, they have a tough time getting response rates. We've worked in Florida a little bit. We've worked in Texas. There's just a few markets where things are tighter, and then you get into some that are really loose and open. And so um, it's a lot of iteration and testing to, it took us when we started our land business, it took us probably, I don't know, we went to maybe 6 different counties before we found one that just was very rich with deal flow. Um, Now, like I mentioned, we're deeper in some on a consistent basis, and then every quarter we'll test one or two markets.
Hmm.
We'll grab something new just to see, to keep things going because markets do play out a little bit, and mostly that's just from competition that come in. There's, some markets that I know there's like 50 land flippers out there canvassing people, and it disrupts the market dynamics a lot because your supply and demand gets really warped in a way. So it's
Yeah,
kind of
yeah, sure, sure. I, and then I guess getting a better understanding of how deep do you go in due diligence, right? You guys do a
Mhm.
little bit on the front end, have a general idea of the assessed value, maybe a general size of the plot of land, what county it's in, but how deep in addition to that, so once you get you get a response from the owner of the property, it seems like you guys are going to be able to strike a deal, based on what you're willing to pay, what they're willing to sell it for. How deep do we go there after the fact? I mean, do we go as far as doing, like perk test? Are you diving into easements?
Yeah.
Soil conditions? I mean, like how much money is spent? How much time, energy, and efforts put into? Because we're talking about, you know, smaller value, smaller values across the board, right? Like I think you'd made a reference to what is it, like 10, 15,000, $20,000
That's
roughly
kind of on the
on
low
average?
end. Usually
Okay.
when we started, we trafficked in several counties where we could buy properties for hundreds of dollars.
Hmm.
And the amount of work that you put in to something is not much different, whether it's
Sure.
$500 piece of property or a $25,000 piece of property. And so, for us, once we proved out the model and we felt a lot more comfortable, we shifted up fairly quickly because for the same amount of effort and work, we could get a bigger payday out of it than, doubling your money on a $500 piece of land or
Right.
tripling it even. I
Dollar
mean,
for
it's
dollar,
just,
yes, absolutely.
yeah.
That's
And so that we still come across properties like that, and if the ROI is there, we'll go ahead and throw it in. But that shifts a little bit the due diligence scope. So, a lot of times if we're buying $1,000 piece of property, let's say, for us, I mean, we will do a minimum amount of due diligence, and if something happens, which it never has, honestly, I mean, there's never been a situation that we haven't been able to work out. But if we have to eat $1,000, okay, we eat $1,000 or do something there. It's not really worth the effort of going too deep. If you get larger in the purchase price and the sales price consequently, the depth of due diligence you can do a little bit more. That being said, our due diligence, we keep it fairly simple. Like we usually look at it in two phases. We send out letters and campaigns. Somebody responds. We do a what phase one due diligence, and that's basically just we re-verify the comps. We'll say, okay, now we know exactly where this piece of property is. We'll take 10 to 30 minutes to evaluate and do some comps. Or in some cases, we have realtor partners that will do a market analysis for us and do things like that. So we'll kind of do an initial look. We'll look at it on a satellite map, Google Earth or Google Maps, or the counties all have mapping tools. What we're looking for there is really just legal access. And so, one, does it have physical access? If it doesn't, we're probably not going to buy that deal. They're just not worth messing with.
Meaning
They're-
that it's landlocked. I mean,
It's
there's really no.
landlocked. Yeah,
Okay.
there's no road going to it, or if there is, it's maybe a dirt track going through other properties. And, in some cases, we'll go and check the easement situation. But usually for us, if it's landlocked, it's kind of a no-go. It's a
Yeah.
instant whatever. I mean, Lygia flipped a deal a few weeks ago where we did have somebody respond. It was a landlocked property, and she just looked at the surrounding properties, and they were all the same owner. And so she said, "Great, I'll get that owner's information." She reached out directly and said, "Hey, would you be interested in buying this piece of property?" It's like a donut. It was like right in the middle
Absolutely.
of all their
Yeah.
properties. And they said, sure. And we agreed on a price. And so we went back to the seller and we just kind of double closed, made a quick flip on it. But, you know, typically we've bought a few landlocked properties in our time and we just, we're transparent sellers, and so it's hard to sell somebody, even with an easement. It
Yeah.
can be hard. And so that first phase of due diligence is really just those main checks. I don't know if maybe title. We want to make sure whoever we're speaking with or interacting with is the actual owner of
Mhm.
record, or at least
Yes.
has signing authority for a trust, or whatever. We try to make sure there's some at least initial look of a clean title.
Hmm.
And that's kind of the basics. When we started this, this is the one regret I would say we have is that we filtered out so many potential purchases because we were, oh, this has a crack on the property, or wow, this is sloped, or I don't know, we were looking at all the cosmetic things and thinking, oh, nobody's going to want this. Now we know there's a buyer out there for literally every property. I mean, the ugliest, worst property, side of a cliff, there's somebody that wants exactly that. And maybe it takes a little bit of extra work to find them, but we haven't ever not sold a property, and we've bought some dogs in the past.
Have you found any properties during your many years of business now that you've kept that you're like, oh man, this is I want to keep this for personal use. This is just a killer deal, wonderful location, beautiful piece of land, and we're picking it up at an amazing price, and it's just good to have as a legacy property. Anything like that?
You can tell the story, I guess. We
Yes.
did have one. We didn't keep it, but
We did have a property. It was in the mountains of Colorado, southern Colorado. It was like a 11,000 feet elevation, gorgeous lot, 5 acres, beautiful, beautiful lot. And we went out there, camped a few times, and it was kind of in a rugged area where in the wintertime there's just no access to it. And we thought we're gonna keep this property. We want to do something with it, and the more we thought about it, it's like, well, it's a beautiful property, but what are we going to do out there, And then we decided one day, you know what, we're going to price it super high. And if somebody buys it, we're going to let it go. And it sure did. It sure happened. And
It's
I
sold, yeah.
cried at the day that somebody, I spoke with the buyer and he was ready to go put the down payment on it. And I cried, literally went to Mike. I'm like, we sold the property.
yeah,
But
it was at a part of our
yeah,
journey. We were renting a townhome. We didn't have a house. We were early days in our business. We weren't, just we were putting all of our money back in the business and kind of
Yeah.
letting it go. It wasn't really appropriate for us
yeah.
to have a side property when we were still looking for a main house. And so yeah, we just thought, what are the odds? that we're ever going to build a cabin in the mountains anytime soon. And so, yeah, we just had this conversation. We're like, let's just price it crazy high. And if
Yeah.
somebody buys it, we'll be
Yeah.
happy because whatever. But I
And
guess,
interestingly enough, now we live, back then we were renting, like Mike said, but now we live at 9,500 feet elevation. We have, I mean, we live in, it looks like a cabin in the mountains, so our dream came true. But
Hmm.
yeah, we were at the point where, like, you know what, we're gonna keep it if nobody buys it. But if somebody buys it crazy high, we're
Yeah.
gonna let it go.
Yeah.
but
Yeah.
we
Yeah.
haven't. We haven't. I mean,
Yeah.
it's in the back of my mind a little bit. I would love some acreage. In
Yeah.
early days, this was our dream. Was we were thinking like 40 plus acres, remote, build a place and kind of live out there. But the more we thought about it, it just probably wasn't really our lifestyle exactly. I mean, you think about going to the grocery store, it's like an event, right? You have to pack up, go, and if you forget something, you don't know. So, now we have
Right.
the best of both worlds. We live up in a mountain community. We're 10 minutes from town. We
Hmm.
have we're 30 minutes from Colorado Springs, which is a bigger city and stuff. But yeah, I still I mean, where we live, we drive in through hundreds of acres of some privately owned land and we reach out now and again, like see if anybody's open to
Yeah.
having any
Well, when the
takers yet.
timing's right, that
Yes.
property will come back around. A property owners,
Yes,
you'll buy a
exactly.
special one. Well, I wanted to ask you just, and you've referenced a few different tools that you use, but what are some
Mhm.
other, I guess, what's the other tech that you use, other tools or platforms that you guys leverage in your business for, various types of parcel research or analysis?
Yeah, so I'll lead with AI. AI is really opening a lot of doors, and so there's Perplexity AI, which is a little more data centric, research oriented. ChatGPT evolves every few weeks, and so those can be great tools. We similar to most people use those probably in the ways that you would think, creating prompts to help with offer letters, or we don't use it so much for research just yet, but there are ways to mine into data and get some of that that's getting more sophisticated. Um, Sales, it's a great help for marketing and sales to understand we do a lot of Facebook Marketplace
Hmm.
advertisements, and so there's a lot of chat interest. And so, it's nice to have a sales coach that can help you understand buying behavior and how to work with people in the chat space. And so AI is almost a separate category. Discrete land tools, we use from end to end. I mentioned list gathering.
Hmm.
We leverage paid platforms just to easily get lists and filter them. We can look for out-of-state owners or people that maybe are tax delinquent or people that have owned their property for 10 years or more that might be more open, rather than somebody who just bought a piece of property. They're not necessarily going to liquidate it right after they got it. So data list gathering. We use mailing services for making offers. We can do that in bulk. We can send them 20,000 names and say, hey, over the next 6 weeks or 6 months, send X amount per week. We leverage some of these texting and calling services. We've done a little bit. Due diligence is a good one. I mean, there's definitely um, flood map sites where you can go and look at floodplain in Florida. There's a lot of different flood zones and ways to interpret all of that. We still leverage old school, like realtors and title companies.
Hmm.
They're great ways to pay, like realtors, you're paying a commission basically. And so they're off doing the work. You don't have to pay any money up front. Title companies are the same. You can even negotiate that on the buyer if you want to, if you're successful in doing that. We split a lot of those costs for land. I mean, we're not talking a big chunk of money. It's $500, $750. They will do the due diligence and the title research.
Yes.
And so it's like hiring an abstractor that can do all that.
Yep.
There's a few online services that do all that. But you get title insurance through title companies, and so that's another reason why we level up in our deal flow so that we can work that into the margin
Yeah.
and just work that out. And then there are land specific VA services that they are familiar with the end-to-end land processes, and you can either outsource the whole thing, you can outsource pieces, you can buy hours of service. And so
Hmm.
That's helpful a lot of times for sales and marketing. If you don't have a large enough business to hire your own fractional or full-time type person. Um, Gosh, what am I, Google Earth I mentioned is an
Yep.
amazing mapping tool. There's some overlays that you can put that kind of plug into the land world where you can go look at parcel information, owner information, and some of that. What other?
Okay. Yeah. No, it's good,
And
good to know.
honestly, the county's clerks are very helpful. Many times we call just to understand what can you do with the piece of property? Can you camp
Hmm.
out there? What are the regulations? Can you build regulations? All that stuff. So we can intelligently talk with the people that call us when we try to sell a piece of property. But they're extremely helpful, and we leverage them all the time.
And you mentioned earlier things like mineral rights, water rights, perk testing. Early days, we used to focus a lot on trying to have all these answers for everybody. Now, we usually put that on anybody who's a prospective buyer. Like we'll have information, we'll have maybe a website they can go to or a phone number they can call, but it's almost impossible to understand all the different use cases that people want
Hmm.
and be prepared to answer all of that. And so we put a lot of that off, but there are also some sites that help with. It depends on the state and the county. Like in Colorado, there are you can look at well permits and see is there a well, is there not a well, is it
Hmm.
permitted properly or not. But it's just extra work, and
We don't do
we
any
don't
of that.
typically get into that.
Got it.
Just it's
Yeah.
let the buyer do a little bit of work. If they're really motivated, they'll chase down the information they want.
Have you guys ventured down the path of larger tracks and then subdividing it and
Mhm.
kind of selling off I was speaking to someone a couple months back and they were looking at, I think their business model was, 100 a couple hundred acres and then splitting it off into like 30 or 35 acre like
Mhm.
ranchettes.
Yeah.
What's
Yeah.
I mean, is that a business part of the business that you guys look at?
We don't personally do it in our business. We talk about it, I think, almost every year when we're thinking about goals and we're like growth and how are we gonna, hey, let's subdivide, let's entitle. It's just extra work, it's extra risk, it's extra cost. And our business, I mean, we have we've scaled our business and continue to grow. And so it's just so easy for us to purely flip without any other headache.
Yep.
That personally, that's where we gravitate. We have some
Yeah.
clients and that do subdivide, and so it is you in like Texas, for instance. I think if you have more than 10 acres, you can subdivide. In other places, it's there's similar models. It just takes longer. It's extra work, but it's more of a value add strategy, right? So you can. It's the starting point of land value add. You can
Hmm.
subdivide, you can rezone it, entitle it, and then you can go horizontal development with roughing out roads or infrastructure of sorts, and then you can go vertical. And so, land is the foundation to all of it. And so there are people that we know that really effectively niche into those value add services,
Yeah.
and they make a lot of
You,
money because of it.
yeah. You referenced on a number of occasions that you can either sell on terms or sometimes you sell cash.
Mhm.
Obviously the terms creates a recurring revenue stream for you in terms of a promissory note. What are there any steps that you take to underwrite or try to manage the default risk when you're carrying back paper on a property, or is it just a matter of you've got the down payment, simple as that, and you're approved?
Yeah, we don't do any vetting of clients. It's if you can make the down payment and you sign the promissory note. The way we do our business model, 99% is deed for contract or a contract for deed, sorry,
Yeah.
where we maintain ownership throughout the payment process and until they, fully pay off the land, then we'll transfer ownership. And so it's a clean process. If somebody does default, we just send them a cancellation notice, a termination notice. The property's still ours. And so, in a twisted way, it's beneficial because then we can just remarket and sell that property again. We work really hard with our clients to not let that happen. We'll within reason give them a couple of months to make up their shortfall. Usually it's only in the instance of people that just totally ghost us,
Hmm.
where
Yeah.
we have to do that. A lot of times we'll rework contracts if people get into, I mean, people get into trouble, right? They have issues, and we try to get creative. We've resold properties and paid somebody out, and I mean, we try to work with people, but the risk is really minimal just because of the way we word the contracts and the way we maintain ownership. We don't have to do a foreclosure or anything like that. And so it's almost a no cost. We just notify people.
Got it. So the,
It's
yeah,
been a
the,
little
no,
thing.
no, no, no formal process you have to go through. Curious to like the yeah, how you manage the property tax. Well, I guess the deed's still in your name, and so you guys are getting notification of property taxes due. Do you just require that if they're going to carry paper on it, or if you're going to carry paper on it, that that tax payment is escrowed in the payment? Is that how you handle it? So that way you don't have any type of tax sale that occurs like underneath your nose.
Yeah,
Yeah.
exactly. Yeah.
Okay,
So we're paying the
Yes.
taxes, and then we're passing them on as part of our contract. And so, like for instance, if you're paying if your principal is $500 a month on your land, then on top of that is whatever the taxes are, and then we reserve the right to adjust those on an annual basis as the counties
Yeah.
raise or lower their taxes. We'll just pass that through, and we'll notify the clients. And so, yeah,
got it.
it's kind of clean in that way. And then we're responsible for paying the taxes, so we know they're getting paid.
Have you noticed just with inflation where it's been the last couple of years, the economy's just not as in good of a shape as what it had been a couple of years prior. Have you noticed a increase in default rates at all, or is it pretty
Hmm.
steady, Eddie?
See, it's pretty steady.
Okay.
Yeah, when COVID hit, we were really panicked. Like we
Yeah.
thought, because we had a lot of paper out there, and we were bracing for a lot of defaults. But
I think we
I
all
don't
were.
know what's that.
I said I think we all were. Yeah, there's definitely a
Yeah,
couple
and
Yes.
it
weeks
just
of no
it
sleep.
didn't really
Yeah.
transpire in the land business, and I don't know if that's because money was injected into the economy and or people really coveted having a place to go and something that was theirs. But yeah, we haven't really seen any trends in our default rate. It's been pretty steady since we
Yeah.
started, and that's very minimal. Like it's really, really low.
Yes, property taxes have gone up, but I
Mhm.
also believe that people are invested at this point in a piece of property. So, I mean, they're not crazy high. Maybe they double. That was the I would say the double per year was the most I've seen where the property taxes have increased. But people are still invested in their piece of property, and they are still paying.
In a lot of cases, it's
Yeah,
because there's a lot of land flippers driving up
yeah,
the market price of land, and so the
Right.
taxes go up.
yeah.
How do you manage if someone wants to make improvements on the property, they want to build something, while while you still have a deed in trust mechanism in place, right? So they're not technically the legal owner just yet. I mean, do you require that they pay it all first before they make any improvements to the property, or does it not make a difference?
Generally, yes. Yeah, our approach is not, in our contract actually forbids any type of improvements on properties. We have had, out of 100 plus deals, one or two people that have done some light improvements. We actually had our attorneys draw up an addendum that anybody who wants to do that will present them with this addendum, and it's pretty restrictive. I don't Nobody's ever taken us up on
Yeah.
it because it just there's a lot of liability in being an owner and somebody working on the property or having work
Yeah.
done, or what if an accident happens or something. It's just not worth it for us. And generally, I mean, if you think about it, if somebody's, I mean, our properties, we're not talking huge amount of money here, maybe $50,000 at the high side if somebody financed a property. And so, if they're wanting to do some kind of development, they can generally pay something off.
Yeah.
If they can
Yeah.
afford to do some development work, they can usually pay something off and
Is there
move into
still,
it.
speaking of liability, is there still liability for you though? In the instance, maybe not improvements are being done to the property, but they're using it. They're out there, they're camping. I don't know, they're climbing trees, whatever
Yeah.
they might be doing on that piece of land. How do you mitigate that risk?
Well, as best we can in the contracts, like when they sign
Yeah.
we have three legal documents, the promissory note, the land contract, and the terms of use kind of a thing. And so, we try to offset that. Fortunately, we haven't ever had a situation come about like that. But yeah, it's
Okay.
in our country, it's certainly a risk because I mean you can
Yeah.
sue anybody for just about anything you want.
And we try to keep it so simple. We're not policing out there our clients. A lot of our clients are out there paying us, paying the land on a promissory note. And we hope that they will respect and honor the contract. But so far has been okay.
Yeah. Well, good. Good. Okay. Well, I know that we're about out of time here, guys. We've I think we've covered a lot of ground here, but maybe I'd like to ask one last final question here. If you had to start this all over today, obviously you've spent many years now putting infrastructure in place and trying to continue to improve upon what you've built. But if you had to start from scratch today, is there anything that you would do differently, building this business back from the ground up?
Thoughts on that one?
I have a thought, just like Mike said in the beginning. I think in the beginning, we would have bought way more land. The market has shifted and has changed so much since we started in 2007, 16, 17. We would have bought more property, more land out
Hmm.
there, I would say.
Yeah, I'd echo that. That's really kind of what I had in mind as well as you mentioned, our strike price or our buy box. We started very modestly, which I mean, we have clients that we work with, and we recommend the same thing. It's just prove out the model, get familiar with the end-to-end process. But um, I would have shifted up into
Yes.
bigger and better deals.
Okay.
We've self-financed our business since we started. We put seed capital in, and we've just never had to really go back to the well to do anything. But it's a great business model to leverage debt just
Mhm.
because, we're making triple digit returns on our deals, especially if we own or finance. And so, I mean, if you're paying somebody 10 or 12 or 15% annual interest rate, it's noise at some point.
Hmm.
And so it's a good opportunity to get in and use leverage as well in a fairly low risk type of environment. So
Yeah, and I know and one thing we haven't covered, but I know that part of your business is not just the land business, right? You guys are also involved in other types of commercial real estate investments. So the land business really generates the income
mhm.
for you guys to take, then in turn invest in other types of passive real estate investments, and probably also find tax benefits from those other investments as well that can help offset some of this active income. So yeah, there's more to the story here. I mean, this is like one piece of the puzzle, and it's obviously
Yeah.
treated you guys really well, and it's been producing for you for many years, and will continue to produce. But you guys also, this is not all you do. You're actively involved in other types of, I think, multifamily, I believe, is the primary focus, correct? Outside of the land business?
It has been, yeah. I mean,
Okay.
after 2 or 3 years in the business, we scaled up to an income that matched our W-2 incomes. And it's a capital gains type process because we're flipping properties really quickly and doing things. And so we had a big tax problem. And so, yeah, as you mentioned, other forms of real estate and or business and investments really complement the land business. I mean, if you're already in real estate, land is a great cash flow generator to fuel your deals or to bridge. We have a lot of syndicators and real estate professionals that like this land business because it becomes a steadier source of income and they can be out there chasing their deals and waiting for syndications to happen or to land a deal. But yeah, it's a great complementary business because especially if you're a real estate professional status and you get unlimited depreciation or near unlimited depreciation, then it really helps keep a lot of this cash flow in play and instead of just paying taxes. And so yeah,
Yeah.
we have been in multifamily. We've been on the sidelines for a couple of years just since things went wonky and the interest rates ran up. And this year we're looking at how do we want to re-enter? Is it we like having more control over our investments, and so we may go a little bit smaller in our deal size and just something that we can either outright purchase or a small JV rather than a syndication where you're part of a big group and you're
Yep.
making group decisions or no decision kind of a deal. So.
Yeah, yeah, no, love it. Well, fantastic. Well, guys, really appreciate you coming to the show, and sharing your insights and backstory. For those that want to learn more, that have an interest in your business, the land business, where's the best place to track you down?
You can catch us at flippingdirt.us. And if you go to flippingdirt.us/freedom, It's a little bit of a landing page for listeners like this. We have some educational material that you can sign up for. It's a launch pad into some other things. Our contact information is on there. You can set up an appointment. So flippingdirt.us/freedom is the best one-stop shop for everybody to go.
Alrighty. Well,
And also,
fantastic.
Mike wrote a book, a fantastic book last year.
Okay.
Yes, I have a book, Flipping Dirt. You can grab that on Amazon in digital or print format and learn a little bit more about the business model and some of our story. So yeah, that's a good
Okay.
ad. Thank you.
Fantastic. Well, Ligia, Mike, appreciate you guys coming on the show. It's been a pleasure having you.
Yeah, likewise,
Thank
Kevin.
All right, guys, that's all we have for this week's show. So until we meet again next week, this is your host, Kevin Bupp, wishing you huge success. Take care now.